This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 226 is brought to us by Bybit. Yes, this will be a predominantly crypto episode, and you need to be buying and trading all of your crypto on Bybit if you're outside of the United States. Why wouldn't you? It's one of the largest crypto exchanges out there. It actually absorbed the largest hack in history. It's the only exchange out there that is truly battle-tested. It has excellent customer support, and best part about it is you get all sorts of different benefits just by clicking my link, which you can find at the bottom of my Bybit blog, and you can find the link for that in the show notes. Click it. Get signed up, get deposited, get trading. That's when the benefits kick in, because with Bybit, membership has its rewards. It is the 10-Minute Contrarian Podcast, and I am operating on very little sleep here because I wanted to run numbers as late as I could so they would be fresh, or relatively fresh, and that was actually a mistake because, as I mentioned on Twitter, I was already excited to bring this episode to you, but when I ran the numbers, I didn't expect to see what I saw. And I ended up being just floored by my own research. Now, this has happened one other time in an episode called Good Night and Good Luck, where I calculated the real inflation that we have had in the United States for the last 5 years, as opposed to the numbers that people tell you. And it was gruesome. And I couldn't believe nobody was telling you these numbers. And look, there's so many people in this world 10 times smarter than I am. Why am I the only person giving you these numbers? Am I the only person who ever figured this out? That's impossible. These numbers, this is it's two very simple math equations. But if I was knocked on my ass by those inflation numbers, then what I'm about to share with you here is like getting kicked down a bottomless pit, like in the movie 300. Like the numbers came up, and okay, so I was in a state of disbelief, and then I'm constantly, rerunning, rechecking, and asking AI if it's true, and AI is like, yeah, dude, it's two very simple math equations, not hard to understand. So I was up super late just going back and forth here. But the show must go on, and the show must start on time. So I just cracked a sugar-free Red Bull and LFG. Now, I'm also glad that this episode is airing when it is. I wanted to do it last week. It's better that we're doing it this week, actually, because I think silver is going to be a really great tie-in here. Now, silver has been all the rage for really the past month or so, but even more so this past week. And that's because the actual silver shock, the supply shock of silver, has become a lot more front and center than it was before. People are finally realizing, after I've been talking about it for the better part of 10 years, really about 5 years to all of you, that we are not going to have enough silver for the things that we want to do in this world. And there is no valid replacement. And this very phenomenon is exactly why I invest in the stocks I do, or at least probably like 80-90% of them. I have a 5 to 10 year time horizon, which you must have if you want to invest this way. If you don't, then I'm just going to tell you right now, you're on the wrong podcast. Go sign up for the Mushy Middle podcast. This ain't it. But then I find something that is not only inevitable in terms of something we're going to need, so that's the demand side, but something we are very low on, or will certainly become very low on because of future demand. So that's going to be the supply side. And as far as supply goes, silver is particularly special because compared to gold, it's a very small market with not a whole lot of miners out there producing it. I shared a tweet this week. It's a YouTube short from Don Durrett. And he said, there's probably only really about 200 silver mining stocks out there. And of those 200, only about 13 of them are actual producers producing real silver. Like in the world. Think about that. And how on earth are we ever going to keep up with the demand from stackers, from governments and their militaries, from the new electrification of the entire world, including all of the increased solar demand, all the way to AI. We're not going to do it. I keep telling you guys. And the world is just now figuring this out. If they think this is bad, wait until they get a load of copper. Oh, shit is right. But I digress. This just illustrates my point, though. If you find something that the world is going to need and or desire, and there's only so much of it, just invest in it now and wait. This moment will eventually come. Now, funny enough, the moment I'm even holding on to my silver stocks for, and really all of my metal stocks, not including gold. Gold is kind of an exception here, but it's not for what's going on right now. What's going on is just the spec run. I'm holding for the actual shortages, to where the entire world is like metaphorically shaking in the corner of the room because they cannot get the silver they need, because it's just not there, and it just flat out isn't coming either. So they're getting desperate and seizing other people's silver somehow, like that type of environment. And I'm going to laugh because I don't have any on my physical person, and simply selling my silver stocks alone will make me a very rich man. And then repeat the process with copper and then possibly uranium, because these things have a naturally very low supply. But the only thing, investing-wise, better than a very low supply is a finite, fixed supply. Now, the reason I think most people are unaware of what I'm about to share with you is that as far as investing goes, I mean, this has been around in like the art world for a long time, especially after somebody dies. But in terms of investing and in terms of money as well, fixed supply is a brand new phenomenon. It started with Bitcoin, and even now, even 15 years later, which is like 300 years on a crypto timeline, even the smartest Bitcoiners out there, and these people are like mega smart, are still not mentioning this enough. But it is extremely important, and a lot of Bitcoiners know this. And this is why they always say things like, 1 Bitcoin equals 1 Bitcoin. Because even though that statement is obvious, what they mean by this is it doesn't matter how much you pay for a Bitcoin or a fraction of a Bitcoin. And I say it here, it's not about the money I spend on Bitcoin. I just want the Bitcoin. I want X amount of it. I don't care how much it costs. Stop looking at it in terms of United States dollars, because we're not playing that game anymore. The new game we're playing is how much Bitcoin do you actually have? And even more importantly, how much of a percentage of the overall pie do you have now? Because the greatest thing about fixed supply, and we'll take Bitcoin as an example here, is if you purchase Bitcoin, or what I always say, just move your money from cash over to Bitcoin, unless you sell it, your piece of the pie cannot get smaller. It can get bigger if you buy more, but you now own a piece of the potential future of money, and that piece cannot shrink. I really need to stress the importance of this, and I'll even give a very rudimentary example. Let's say you are at a party hosted by some very strange people who like to play very strange, nonsensical games. And in one of the games, somebody is sitting on a sofa with 6 beanbags. And randomly, they will throw one of the beanbags on the floor, and everybody has to scramble and try to get it. And that's it. That's the game. Now, let's say the first 2 beanbags that are thrown on the floor, you are able to obtain. What's great about that is you now have a third of the overall pie. And no matter what happens, unless you get your beanbags taken from you or stolen, that piece of the pie will never get smaller. It can go up, if you find a way to get more beanbags. But for right now, you have pretty much solidified yourself as the beanbag kingpin by owning a third of the overall supply, regardless of what happens in the future. So I guess, long story longer with this, for the first time in our history, we're dealing with fixed supply. And when we're dealing with fixed supply, the size of your overall pie piece is all that matters, because your share of the overall thing cannot be diluted. With cash, it doesn't matter because cash is diluted all the time. With stocks, it doesn't matter because stocks are also diluted all the time. Even with mined metals, we don't really know how much is in the ground or how much we're going to find later. At this point in our history, we have a fairly good idea, but we don't really know for sure. So there's nothing fixed there. A lot more supply that we didn't know about or we didn't expect can come online. But not here. Not anymore. The size of your pie piece will be all that matters. And the Bitcoiners are on the right track. That's why they say 1 Bitcoin equals 1 Bitcoin. Just stack sats. And again, this phenomenon is not emphasized enough. But this is why they say it. To get you to increase the size of your pie piece. Because in a fixed supply system, this is the only thing that really matters. Do I have everybody on board with this? It's important that I do, because if I don't, the rest of this is not going to register a whole lot. Now, we are still early in Bitcoin's life cycle to where this whole pie piece thing doesn't really matter yet, but it will once we start seeing real supply shocks. We had an episode on this called We're Running Out of Bitcoin. What's interesting about crypto is that we'll never truly run out because you can fractionalize this, all the way down, like I think with Bitcoin, down to the 8th decimal. And then from there, you can go even further if you just want to talk about Satoshis. Those numbers could be off, but you get the idea. If somebody wants $2,000 worth of Bitcoin, it will always be there. You will just be able to get less of it. But, with all the institutions in now, in America at least, the last holdout was Vanguard, and big as they are, they're in now. But let's say they need 1,500 Bitcoin for their clients. Where do you get it from? Well, you get it from exchanges. There's going to come a day where the exchanges combined aren't even going to have 1,500 Bitcoin to give. And Vanguard's going to be like, well, we have this much money, and that's 1,500 Bitcoin, and we need it. The only way that these exchanges are going to be able to satisfy that demand is by raising the price of Bitcoin so high that now you have satisfied this demand in dollar terms, but by simply giving them a lot less Bitcoin, because that's all you got. You will see this happen, not only in our lifetime, but almost certainly in this decade, and possibly sooner than later. And this is why you want to lock your pie piece down as soon as possible, and then just sit back and wait. Now, the great thing about Bitcoin is it has been the first thing in my lifetime for sure, because it's been probably centuries since we as a society have come together and said, okay, we all agree that this is money. We have to do that first. The only alternative is if you have something and you say, well, this is backed by something like gold, which has already been money for a very long time. But this is the first time ever, like we're living in it, contrarians, that we took something that's not backed by any of the traditional things and said, okay, we can now all agree that this is money. Now, it's not 100% agreement rate, of course, but it's enough, and we actually got there with Bitcoin. And because this was the first, and it has a fixed supply of 21 million. The first movers have all piled in, and the price per Bitcoin is over $100,000 as we speak. meaning that if you get in now, your piece of the pie is still going to be meaningful, but not nearly as meaningful as it would have been had you had gotten in earlier, of course. But what if I told you there were other cryptocurrencies out there that operate the exact same way Bitcoin does, that are far cheaper, which means your piece of the pie is going to be much, much bigger than it would be with Bitcoin. And these things are money. We just haven't all agreed on it yet. Again, 15 years in crypto is like 300 years normally. Probably more. I just made that number up, but there doesn't have to be just one. Remember, gold and silver both have been used as money for millenniums now. Oddly enough, silver was used as money first, and then gold came later. But there are four technically, we'll talk about this. I'm going to say right now, 3 cryptocurrencies that are based on the same proof of work as Bitcoin, that have been around almost as long, but most importantly have been around long enough to be kind of grandfathered into this real first generation of cryptocurrency. You know, anybody can go invent a proof of work crypto right now and say this is it, but you don't have the legacy. You certainly don't have the market cap. You certainly don't have the usage rate over time that Litecoin and Bitcoin Cash also have. So your argument here is irrelevant. And the only reason people roll their eyes and snicker when you mention Litecoin and Bitcoin Cash is that we as a society, as humans, simply have not declared them money yet. And we don't know if we ever will. Now, I'm thinking, why wouldn't we? Like I said, it's the same. It runs the exact same as Bitcoin. It actually runs much more efficiently than Bitcoin does. It doesn't need a layer 2 or anything to transact. It's very fast and very efficient on its own. They're both comfortably in CoinMarketCap's top 20, even though most people laugh and snicker at it. They both get used a lot. You know, where would you put the chances? 50%, 80%, 20%, 1%? If you answered 1% and you were dead serious about that, then after this episode is over, the very first thing you need to go and do is buy as much Litecoin and Bitcoin Cash as humanly possible, not financial advice. If you said 1% or higher. VP, what the hell are you going on about? You are delusional, even more than usual. Allow me to explain. And even if you're not ever going to be a fan of Litecoin or Bitcoin Cash, stay with me because shit is about to get even crazier than what I am about to tell you right now. So I ran these numbers right around midnight on the 18th of October, 2025. So if you're listening to this anytime in the future and you decide to run these numbers, your results are certainly going to vary one way or the other. But what I did is I took the fixed supply of Bitcoin, Litecoin, and Bitcoin Cash. So Bitcoin Cash has the exact same fixed supply as Bitcoin does, 21 million. Litecoin has 4 times that, so they're at 84 million. And what I did is I took their what's called fully diluted market cap. Now you may have seen this before, this metric. It's they have it in stocks, they have it in a lot of things. But what does it actually mean? All right, so for starters, the initials are FDV. I will refer to it as FDV from this point on. And it's not, the reason why most people don't really pay too much attention to it is because it's not a great metric most of the time. The way you figure it out is you take the total supply and divide it by the price of the stock, of the asset, whatever it is. And that's it. Supply divided by price. And now the reason it's not a very accurate metric and why a lot of people don't use it is because the price is going to move a lot, and in most cases the supply is going to move a lot too. So you have the numerator and denominator constantly moving up and down, And that makes your FDV move up and down a whole lot too. So what it looks like today could be way different tomorrow. And that's why it doesn't get used a whole lot. However, when you have a fixed supply of something, which remember, this is a brand new phenomenon in the investing world, now the numerator locks in place and doesn't move at all, making FDV now actually a fairly valid way of measuring things. And so now when you have a fixed supply, what FDV is more or less telling you is this. Are you listening? FDV is now telling you, how big of a pie piece can I get if I have X amount of dollars to spend? Based on what we just got done talking about, how the size of your pie piece is pretty much everything, this has now become a pretty important bit of information to know, huh? Where can I get the largest pie piece when it comes to what could be the overall future of money? We have already declared Bitcoin to be a real candidate. Will it replace, gold and fiat and all that? Maybe in our lifetime, who knows? But we have declared it legitimate as a society, and that was a huge step. Will the same thing happen with Litecoin and Bitcoin Cash? Maybe. It all depends on what you think those possibilities are. Some of you might laugh, but almost everybody laughed at the possibility of Bitcoin becoming this not even 10 years ago. So, maybe you're wrong. You would have certainly been wrong about Bitcoin 10 years ago. Almost everybody was. So how sure of yourself are you going to sit there and be in 2025 and say, no, this ain't it? So anyway, I ran the FDV on all three of these cryptocurrencies. And Bitcoins came out to be right about $198. So then I just made one other very simple division problem, one very simple equation. I took the FDV of Litecoin and Bitcoin Cash and divided it by Bitcoins. I divided it by 198, all in an effort to see how much bigger of a pie piece could I get if I invest the exact same amount of money in either Litecoin or Bitcoin Cash instead of Bitcoin. Very simple. But the results I got were fucking bananas. Allow me to share them with you. So I double-checked with AI. I had Grok and Gemini right there. And based on this equation, the next one up the list after Bitcoin was actually Bitcoin Cash. All right. And it makes sense because Bitcoin Cash's price is much higher than Litecoin's right now. But just off the top of your head, how much bigger do you think your pie piece would be in this situation? Let's just say you had $1,000 to spend on one of these three. How much larger of a pie piece do you think you could get if you invested in Bitcoin Cash instead of Bitcoin? Like 30% more, 80% more, 2 times more, maybe 4 times, 8 times, 20 times? I mean, that'd be crazy. You get 20 times the pie piece? That would be extraordinary, right? Well, strap in, Petunia. That's not even close. If you were to take $1,000 and spend it on Bitcoin Cash instead of Bitcoin, Bitcoin Cash, fine. But your pie piece would be over 229 times bigger than it would be if you spent the same amount on Bitcoin. Again, I saw these numbers and I did not believe it. I had to rerun the calculation. I had to ask Grok. I had to ask Gemini. Now they all confirmed. They're like, yeah, bro, it's 2 very simple equations. Nothing tricky here. And as much as you might think Bitcoin Cash is a meme at this point, 1, the market cap and the amount invested would disagree with you mostly. 2, does it change your mind at all that you could get 229 times the pie piece size, the share of the overall game, as you could in Bitcoin for the same amount of money spent? I mean, that would certainly change the calculus for me. And I've never been a big Bitcoin Cash believer. You guys know that. But to all my poker players out there, It's pot odds. If there was a bet out there and your hand had almost no chance of winning, but it did have a chance, but by matching the bet, you could get 229x on your money, you would make that bet every single time because the simple math says you absolutely should. And just look at what the math is about to say about everything else beyond Bitcoin Cash. But I do really like Litecoin. Anybody who's familiar with this podcast knows this. And it's weird. I've put my Litecoin theory out there, which I don't think is really ridiculous, that it will get adopted after Bitcoin, just like some people favor silver over gold because you can just simply get more of it, and it is also money, just like gold is. There's going to come a time to where most people can only afford like maybe 0.0014 Bitcoin, and how exciting is that? When you can actually get multiple Litecoins, and if they all spend the same, this is something that can really happen. I don't discount this idea at all. I actually think it's very plausible. And more plausible, or at least would happen sooner than it would be with Bitcoin Cash, I can tell you that. Litecoin's used way more than Bitcoin Cash is already. But let's do the pie piece equation for Litecoin. Now, Litecoin is about a little over 5 times cheaper currently than Bitcoin Cash, but has 4 times the market cap. So it's going to dilute it a bit here. Now, this is where my head figuratively exploded into like a million pieces. So if you do the same equation, you can get 229 times the pie piece size with Bitcoin Cash. But for Litecoin, check this shit out. You can get 4,775 times the pie piece size as you would for spending the same amount of money on Bitcoin. What? This didn't make any sense to me. This is why I went to bed so late last night, or one of the reasons. I'm like, in my little brain, this didn't make any sense. I'm like, because of what I just told you. Okay, it's a fifth the price, but that's almost completely negated by the fact that the market cap is 4 times bigger. It's diluted. And so I asked AI, and AI was like, I get what you're saying, but you're not looking at it the right way. The difference in price actually means a lot more than the market cap does. That's the short version. What I am going to do here, actually, for those of you who are just as confused as I am when it comes to something like this, as a lot of you guys know, this podcast is mostly listened to on audio, but it does go to YouTube. What I'm going to do is I'm going to go to the comments section in YouTube and pin a comment to the top. And that comment is going to be the answer Grok gave me. And it gave me a very mathy answer at first. I was like, hey, just put it in layman's terms for me. So instead of pie piece, I think Grok used like a cookie jar reference. And if you want to see how they explained it to me, I will put that in the posted comment on YouTube right underneath the video for this episode. But if you do the very simple division, that's what you get. Guys, I'm kind of staking my reputation a little bit on this. Like, if it turns out I just did like one little thing wrong and it's throwing off the entire equation to everything, I'm going to look really silly because I just spent this entire episode like gushing about it or just talking about how unbelievable it is. Even though 2 different AI LMMs both told me that, no, you're not crazy, VP. There's a very good chance that I might be here, and I just hope that you guys remember me for my other contributions and dismiss this as just me being a bit too eccentric and a bit too excited. Because I still can't understand why this is the case, even though I was provided a very valid answer twice. 4,775 times the pie piece size if you just choose Litecoin instead of Bitcoin. Maddening. Oh, but it gets crazier, contrarians, because, I'm not sure if you knew this, but apart from cryptocurrencies, there are quite a bit of crypto tokens out there who have a fixed supply. Now, what's different than the actual cryptocurrencies is there's almost no chance, really zero chance, I think, that those cryptocurrencies will ever change their supply. There is always a chance that these blockchain tokens, these crypto companies, could do that. You have to ask yourself a couple questions. One, would there really be a reason to? Because like I said before, you can fractionalize all this down to, many decimals. I guess you would only do it if you had to raise money. I don't know. But then the second question you would ask is, okay, let's say they doubled their supply. Would it even really matter a whole lot if they did that? And once I read you these numbers, I think that the second part of that question is going to be answered right away. Because this is where things really get bananas. So what I did is I only dealt with tokens in the top 50 of CoinMarketCap, which is where we like to play anyway. I've always felt like there's so much upside and asymmetry in your large cap tokens that you really don't need to play the lottery. But I asked Grok to give me a list and then sort them so I could see if I spent, let's say, $1,000 on Bitcoin and it gave me a certain pie piece size. How much bigger could my pie piece be had I taken that $1,000 and invested it in one of these other crypto tokens? How big of a percentage could I lock down here compared to Bitcoin? Now, these numbers, I think, wouldn't be as profound as it would be if you were buying the future of actual money. That is the one force multiplier, I think, that just trumps everything else. But a lot of these companies that I'm about to name are going to be around a long time and could very well be the future of technology. And to be able to get a large pie piece here, you're going to tell me that's not significant? Just wait until you hear how big of a pie piece you can get. So again, how many is this? There are 18 in total, including Bitcoin, Litecoin, and Bitcoin Cash in the top 50 that have a fixed supply. There's that many. Now, a lot of these I invested, and I knew they had fixed supplies, but it didn't register with me just how much it matters. So write these down if you want, or just simply enjoy the rest of this podcast episode and come back. Unedited, I am currently at the 32-minute mark. So maybe go back to there and then get a load of these numbers. So we will go in order. So you have Bitcoin at 1, because that's what we're measuring by. Bitcoin Cash, 229. Bitensor, ticker symbol TAO, 290 times the pie piece size of Bitcoin. Next is our pal Aave, which we hold. Actually has a lower fixed supply than Bitcoin does at 16 million, oddly enough. With that, you can get 387 times the pie piece size as you could Bitcoin. Moving up next is Zcash. This is the other cryptocurrency that I think is actually valid. It was built the same way. It's put in the time. It is a privacy token, which we will actually have a dedicated episode on. So I'm not going to spend much more time talking about it, but you're dealing with 498 times the pie piece size. Litecoin, and it really starts to get crazy after this. Litecoin, as we said, 47.75. Next is Avalanche, also in the portfolio. The jump from Litecoin to Avalanche, get this, we're jumping from 47.75 up to 183,437. Again, how is this possible? Because, well, according to AI at least, the price, these cheap prices, as the divisor in this equation, factor in a lot more than the supply, the dividend, does. Again, all we're doing is taking the supply, dividing it by price, and then dividing it by 198. Oh, but let's keep going. Probably my favorite altcoin. You guys know what it is. It's Chainlink. As if I needed another reason to buy more Chainlink. You're jumping from AVAX's 183,000 up to 304,000 with Chainlink. Next up is also in our portfolio, Uniswap. You're jumping from 303 to 825,000 with Uniswap. Moving up, Near Protocol. Now, you're really getting up there now. 2,342,000, give or take a little bit. You want to jump up even more, more force multipliers here? In our portfolio is also SWE, which is 20,813,000. Up from there, WorldCoin, 58.5 million. Up from there, Arbitrum, 167.9 million, Jesus Christ. Next up from there, Athena, 107, more like 180 million, rounded up for Athena. Next up, you have XRP, 220 million times bigger piece of the pie than you could with the same amount invested in Bitcoin. Up from there is our old friend Cardano, which you can stake and get 3 to 4% every year, risk-free, which is awesome. 364.4 million. Above there, Stellar Lumens, which is 829.2 million. And then at the very top of the list, you have Hedera, believe it or not, at about 1.56 billion times bigger pie piece than you could if you invested the same amount into Bitcoin. Again, contrarians, I'm slowly losing my mind over this because it doesn't seem right. It doesn't seem to make any sense. Now, this doesn't mean I'm putting values on any of these tokens either, because at the end of the day, these companies set the market cap and the overall starting price. So if you really wanted to, you could set the delta between the market cap and the price as ludicrous as you possibly could. But again, these are just two very simple math equations, like elementary school division problems, combined. And after I was done, I even asked Grok, I'm like, okay, so you're telling me that my pie piece could be 1.5 billion times bigger than my Bitcoin pie piece if I invested the same amount of fiat currency into both. I'm going to go ask it again right now. So, okay, just bear with me in my lunacy here. I'm going to read the question I typed into Grok and then read the answer it gave me. So the question I asked, word for word. So just to verify, if I invested $1,000 into Bitcoin and $1,000 into Hedera, my overall piece of the total pie with Hedera would be over 1.5 billion times larger than my overall piece of the pie with Bitcoin. Is this correct, TLDR? The answer, TLDR, yes, your statement is correct. Investing $1,000 in Hedera, HBAR, gives you a piece of HBAR's total pie as a fraction of its max supply that is 1.56 billion times larger than the piece of Bitcoin's pie you get for $1,000. This is because HBAR's fully diluted valuation is 1.65 billion times larger than Bitcoin's FDV, reflecting the massive difference in max supply and price. Feel free to go ask AI this question yourself. You should get the same answer. So, what's the catch? Well, the catch is that in order for this to have any significance at all, these tokens have to eventually matter. And that's exactly what we've been betting on this entire time. If Hedera, for example, doesn't really pan out to be anything of any significance, then it doesn't matter what the supply is. Doesn't matter if it's 7 trillion times bigger than your slice of the Bitcoin pie. Well, maybe it actually could be. But these things have to matter. The whole thing with Bitcoin is your slice of the pie there doesn't matter unless Bitcoin really matters and does what it was designed to do. If it does, then oh boy, the size of your pie piece is going to matter a lot. It might end up being everything when it's all said and done. If we ever get to this hyper Bitcoinization that a lot of the Bitcoiners, a lot of the maxis talk about, then yeah, your place on the global pecking order is going to be almost completely correlated to the size of your pie piece. But again, it has to matter. And that's the catch. But here's what's great. There's a reason why I let off the show the way I did with silver and then with Bitcoin. Because like with anything, it doesn't really matter until it does. And then it really fucking matters. And if you think this can't happen, just look at what's going on with silver right now. Silver really, really matters. And in my opinion, probably will for a very long time. It's just that people didn't realize it. And that's why price stayed where it was and didn't move for a long time, and got a lot of people saying, well, why would I bother investing in something where the price isn't moving at all? That's stupid. Okay. Again, it doesn't matter until it matters. And that's why we have such a long time horizon here. You got to give it time to matter, because it's probably gonna. And what's going on with Bitcoin right now? Bitcoin matters a lot more than it did before. And as I said in that episode, the episode called We're Running Out of Bitcoin, there will come a time where institutions especially will want X amount of Bitcoin, and it's not going to be there. Just like certain places are going to want X amount of silver, and the amount they're asking for is just going to flat out not exist. It's called a supply shock. Same thing with Bitcoin. It doesn't really matter until it matters. And when it does matter, the amount you're sitting on, not the dollar's worth, the amount of silver, the amount of Bitcoin you're sitting on will mean everything. And the bigger your pie piece is, the more you own. Now I get it. So there are so many other variables in this overall equation, but you absolutely can break it down into very simple math at the end of the day. When you have a limited supply, like silver, and especially a fixed supply, like Bitcoin and other cryptocurrencies, and possibly some of these other crypto tokens. Oh, because like I said, let's say Chainlink decides to dilute and double its supply. With the numbers I just read off to you, it's like, so what? If I could triple it, 10x it, I don't care. At the numbers I just read off to you, not even significant. But if these fixed supplies hold, and remember, this is a new phenomenon we are not used to dealing with as a race of humans. It's just too new. We haven't had time to conceptualize it yet. But if the day comes where any of these other things also start to matter, you're going to be really glad you locked down your piece of the pie. And this is why we invest. And this is why here in Contrarian Land, we love to invest in things with an insufficient supply. And now we also like to really invest in things with a fixed supply. Things like this completely change the game and give us a gigantic advantage over your average investor. So go with confidence. Unlike what I am doing with this episode, there's something I feel like I'm just missing something, and feel free. If there's one big factor that I'm just completely missing and not seeing, then maybe so. Thank you for spending time with me anyway. But if there is something I'm missing, please go to YouTube into the comments section and say, hey, here's the smoking gun, VP. You did not factor this in. And look, I already know one of the big factors is the probability of these things becoming significant. But in the stock market, if you took some of these stocks and just never diluted the supply, the prices would be off the charts. And so many of these cryptos have declared that they have a fixed supply and they're not moving it. It's the very makeup of the original cryptocurrencies. So they're not changing. I don't know, man. Shit's just wild. And I couldn't sleep last night thinking about it. But maybe I will lose sleep over the next 7 nights thinking about how dumb I am, that I acted like I was Christopher Columbus and was the first person to ever discover the absurdity of this shit. I don't know. But put yourself in my shoes for a second. Imagine you discovered this and found these numbers, and you understand the absurdity of it, and nobody else ever talks about it, like you're gonna go crazy, like legit crazy. But there's always the chance that I'm not crazy, and we're all just blessed to be so early.